And the global economy well, let's call it interesting. But as any savvy investor knows, uncertainty often brings opportunity. So what's driving the market right now? First up, tech is back in the spotlight. After a rocky time in the world and markets from 2021 with total shakeup from 2021-2022 up to today, big names in tech have bounced back in a big way. Why? Artificial intelligence and what's to come. Companies like the Mag 7 and Nvidia and Microsoft are leading the charge, not just riding the AI hype, but actually delivering real-world results. Think record profits, massive partnerships, and steady growth. But remember, there will be ups but also downswings day to day, but over time. But just zoom out and look at the turns over months and years. If you're bullish on the future of AI, those two are tough to ignore, but don't just stop at tech. Healthcare is looking bright too. With an aging population and new innovations in everything from cancer treatment to wearable tech such as the Whoop, companies like Johnson & Johnson and Novo Nordisk are sitting pretty. They've got strong cash flow, good dividends, and they're not as sensitive to economic ups and downs. Stocks with dividends are the key to long-term wealth, but only if you reinvest them over time. Now let's talk energy, which will balance things out and keep you safe as an investor. Renewable energy is growing every year, but oil and gas? Still crucial. Giants like Shell and BP have diversified portfolios, blending traditional energy with renewables like wind and solar. If you want to hedge against inflation and geopolitical drama, they're worth a look, but do your own research and try to fully understand their use now and into the future and years to come. What's ahead? Well, we're not out of the woods yet. Are we ever? The Federal Reserve's next moves will be key as Trump tries to remove Powell. If rates stay high, expect more tech volatility. If they drop, growth stocks could sprint ahead, but this hinges on the tariff decisions from the precedent, Mr. Donald J. Trump. Economic data is still mixed. Jobs are strong in the USA as unemployment is low, but consumer spending is showing cracks via the cost of living in America and the United Kingdom. This means defensive stocks and ETFs. Think utilities, consumer staples, evergreen products such as food, housing, mortgages, clothing, and the companies that sell and/or provide these products might hold up nicely if things get rough. So the big question, which stocks are worth a closer look, and are they worth investing in as a first-time investor, retail investor, or long-term holdings? For tech, Nvidia is a bargain, and Microsoft is proven for long-term holding, and dividends. My top picks has to be the Mag 7, but also keep your eye on the S&P 500, which has many buying options with an average return per year of 10%. In healthcare, Johnson & Johnson and Novo Nordisk offer stability and growth. For energy, Shell and BP keep your portfolio balanced, and if you want to play it safe, look into Unilever or National Grid for those steady dividends. Remember, investing isn't about chasing the hottest tip. It's about building a portfolio that fits your goals and risk profile. Diversify, stay patient, and keep an eye on the long term. In a market like this, opportunity favors the prepared. So do your research, stay curious, and maybe, just maybe, you'll spot the next big winner. Thanks for watching and happy investing. But remember, your capital is at risk. Do your own research ahead of time. This is not financial advice. Have a great day.